Should you invest in cryptocurrency? Can you really make money in this stuff, or are you just going to lose it all? Let's find out. So crypto. Now, for all intents and purposes, I'm just going to say Bitcoin rather than all cryptocurrency. It's the first, it's the oldest, it's the biggest by far, and it's the one we have the most data for. So there's lots of cryptocurrencies out there, but I'm just going to talk about Bitcoin for now. So should you invest in Bitcoin? Well, it's not that difficult of a question to answer, actually. Why do we invest money at all? We want two things. We want the greatest return on our investment with the least amount of risk. So let's take a look at the returns on our investments. Let's start with real estate, the most common, the most well-known. If you live in a coastal city in America, you're going to make about 7% a year on a house. The stock market average is 12%. So if you buy the S&P 500 index, you'll make 12% a year. If you buy the top performing sector in the S&P 500, which is tech, you'll make 17% a year. So that leads us to our next question. What's the average annual return on Bitcoin? It's 104 freaking percent. You heard me right, baby. 104% average annual return. Now, I clipped this from an article where they're comparing Warren Buffett's portfolio and its performance to Bitcoin. CAGR, by the way, CAGR, that's compound annual growth rate. That's the metric that we use to determine the average annual rate of any investment. So they were looking at Warren Buffett's portfolio. It averages about 10% a year. So it's nothing to get excited about. He buys a lot of companies that make a lot of money, but his investment portfolio only makes 10% a year. Bitcoin, 104%. So let's take a look at how this happens. How can it be so much bigger than any other investment? Well, there's one big reason. Of all the investments I named, only one of them, Bitcoin, is deflationary. There will only be 21 million Bitcoin ever created. That's it. It's a closed system. It's not just going to go on and on and on and be produced like dollars. There'll be 21 million. And there's already, at the time of recording, 18 million in existence. And people are just starting to really learn about Bitcoin, and demand is slowly increasing. So when supply goes down, if demand remains the same, what happens to the value? It goes up, right? That's Econ 101. Now, as I said, more and more people are learning about Bitcoin, which means demand is actually going up too. So every 4 years, supply is cut in half. Okay, Bitcoin follows a 4-year cycle. It starts with an event called the halving. So the number of Bitcoin created each day is cut in half. Again, that happens every 4 years. This is the deflationary aspect of Bitcoin. So if you take a look at this chart, this shows you, these are the number of Bitcoin created every 10 minutes, which is what's considered a Bitcoin block. That's how it's created. About every 10 minutes, it's digitally created. Now let's take a look at this chart. This shows the halving going back many, many years and the effect of the halving on price. If you take a look here, after each halving, the vertical lines are a halving. Now take a look after each halving. What happens? It shoots up. The value just keeps going up, going all the way back to 2011. Now let's take a look at the 5-year chart. This is a 5-year chart of Bitcoin. The orange line is Bitcoin. Look how much higher it is than everything else. Those bottom 3 lines, the blue line is the S&P 500, the gold line is gold, and the greenish line is the bond index. I don't know who wants to invest in that other than 80-year-old men who were told to invest in it if they were younger. Look at Bitcoin. Look how much higher it is, 600%, over 5 years. I mean, it's somewhat ridiculous. I got one last chart. This Bitcoin being compared to other assets. So this takes a look at different asset classes. At the top, you see BTC in black. That's because it was a top performing asset over almost a 10-year period. There's only 3 years in there, 2014, 2018, 2022, where Bitcoin wasn't the top performing asset class. That's it. It's outperformed everything else over 10 years. And in those 3 years, it was the least performing asset class. It was at the bottom. Now, there's a reason for that. Like I said, it follows a 4-year cycle. So after the halving, it hits a peak at a certain time, and then it typically collapses 80 to 85%. This is why when you annualize those returns, an average amount over so many years, you get 104% return. Some years it's going to be up hundreds and hundreds of percentage points. And then there's going to be that 1 year where it's dragged down 80, 85%. So how do you invest in Bitcoin? What do you do? Well, you could just hold it straight on through these cycles. Cycle after cycle, you could just hold. But you're going to have to stomach a lot of volatility because, as I already said, it shoots up after the halving and then it falls back down. So if you could stomach that massive drop and those, whipsaw ups and downs, then you can just buy it and hold it. Or you could play the cycle. So if you buy at the right time and sell at the right time, you can make that incredible amount of return in only a 2-year period. So we know the right time to buy, we know the right time to sell. Looking at the data, typically the right time to buy is about 6 to 8 months pre-halving. That's when it usually hits its lows. The time to sell is 18 months post-halving. That's when the effects of the halving, like I showed you on that chart, really take off. After that 18 months, it hits a high and then it starts to plummet. So if you play that cycle, you can make 400, 500% just in a 2-year time frame. Remember, the S&P 500 will give you a 12% return. That means it's going to take you about 42 years of investing in the stock market, assuming the market average for a return, to equal just 2 years of investing in Bitcoin. You can make all that money in that short amount of time. But like I said, there's a catch. You got to buy at the right time. You got to sell at the right time. I don't think the future of Bitcoin is going to be the way it is now with these massive jumps up and these massive drops down. More and more people with big money, like institutions, fund managers, pension funds, they're getting involved and they don't trade things. They don't buy something and then trade it or sell it in a year or 2 years. They hold it for 10-year time periods. So I don't think we're going to see these massive, ups and downs, up and downs. But we should still see a price increase because we have that deflationary aspect built into it. Every 4 years, the supply is cut in half. So supply and demand, that tells me that we should see an upswing in price unless suddenly there's no demand for it. So I like it. I've invested in it. I've made a little bit of money. I made some mistakes in the beginning. I didn't start learning about it until, a few years ago and started getting involved. But I've made good money in altcoins, which I'm a big fan of, and the actual use cases that they help solve. I found that more interesting than just the investment. But if you haven't already, if you're interested in this, take a look. Take a look at Bitcoin. Take a look at other cryptos if you're interested. Leave a comment below. Let me know if you are a Bitcoin investor. I would love to hear how you've made money or how you've lost money in it. Don't forget to like and subscribe to the channel, and I'll see you next time.